Here's a question. With so many political question marks around the globe, North Korea, French elections, OPEC, has economic data become all but irrelevant? Good question. Let's get answers. I'm Brian Sullivan, Matt Maley with Miller Tabak, Boris Schlossberg with BK Asset Management, your Trading Nation team today. Boris, do you think that economic data is pretty much irrelevant right now?
I definitely think it's irrelevant at this point right now because the politics is driving everything, starting with the U.S., where it's really going to be all contingent upon the Trump administration to do tax ramifications and infrastructure spend. If they can't get those two things done in the summertime, I think a huge part of the Trump rally just simply dies on the vine. And then just as soon as this Sunday, we have the French elections, which look like they should be okay, but there's a very, very strong chance here that you could have a right-wing candidate and a left-wing candidate. The absolute worst-case scenario for the markets to possibly come out of the whole situation happen on Sunday. If that happens, you're going to see a massive amount of risk aversion. So I think politics is driving everything as we stand right now in the capital markets.
Matt Maley, would you agree?
I do, to a certain degree. The one thing that was kind of interesting, though, you're talking about politics, is that the economy, everybody was talking about how the economy was already getting better when the election took place and all these numbers started coming in better. Well, as we're moving to this time frame and all the issues that Boris is talking about, we're starting to see some, the economy starting to weak a little bit. I mean, look at what's happening to oil today, and there's a lot of different reasons for that. But we've seen, you know, the commodity index starting to roll over a little bit. We've seen copper come down. And one thing that we've really seen, the Citigroup Economic Surprise Index has completely fallen out of bed over the last 2 weeks or so, and especially in the last week. And then you look at the Atlanta Fed's GDP now. They've lowered their first quarter GDP estimate to 0.5%, but 0.05%. So suddenly it looks like the economy's starting to slow a little bit too. So if some of these geopolitical issues become more of a problem, especially in Washington, D.C., and things get pushed out, like Goldman Sachs is now saying tax reform doesn't happen until next year, we got some big problems. And I totally agree that it would have cause some problems for the stock market.
Yeah, you know, Matt is absolutely right. The disparity between the soft indices, the sentiment indices, which are at all-time highs, and the actual hard data has been the highest in a very, very long time. And that's the really big problem, because until that disparity starts to narrow, in other words, until the real economy begins to catch up to sentiment, we're going to be seeing much bigger problems in the capital markets as we go forward.
All right. Well, listen, we're watching these French elections. And by the way, on my Facebook page, Sully CNBC, I posted the 4 candidates and what the market sort of reaction may be. You're right, Boris. It could get far right, far left. The market's hoping for the two centrist candidates to get that bid. Boy, it's going to be... Yeah, we'll
That's
cover
the best case scenario, yep.
Yeah, my colleague Michelle Cruiser-Gobert will be live in Paris for the election as well. Matt and Boris, thank you both very much, folks. Thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.